Good evening, guys. It's Saturday, April 22nd. My name is Dave Coker, and this is Talking About Finance. And, oh boy, this is such a great night, such an exciting time, such an awesome opportunity to be here with you. Because we come here for one reason and one reason alone, to build wealth. We know you can't trade the market. We know you can't time the market. We know you can't chart the market. These techniques don't work. And those who purport to teach trading, to teach market timing, to teach chart analysis, those who claim they will help you beat the market for a fee. Sometimes a small fee, sometimes a large fee, but it doesn't matter. They want a fee. We know they're charlatans at best. We know they're frauds at worst. We're followers of the one way, the true path, the only way to build wealth reliably, consistently, over a long period of time in the markets. We know the need to buy. We need to hold. We need to own assets that pay us to own them. We collect this cash flow and reinvest it into additional cash flow paying assets. It is that simple. It is that easy. It is that reliable. So we like dividend paying stocks. We like rental property. We even like intellectual property assets that pay us royalties. So this evening we're going to do what we do every week, what we've been doing for years. We're going to talk about finance. And the S&P closed this week down about 10 basis points. 6 sectors outperformed the S&P as a whole. Consumer staples, real estate, utilities, financials, industrials, and consumer discretionary. 5 sectors underperformed the S&P, specifically healthcare, materials, information technology, energy and communication services. So not a bad week. We closed down, but it could have easily been worse. Q1 2023 earnings season has been a thing now for about a week. Nothing out of the ordinary, well within forecasts, and that's a good thing. The market, as you know, doesn't like surprises. The VIX traded down to 16.77. It opened the week at 17.58. Again, we're seeing lots of softness in the VIX, which is all, as you all know by now, makes me suspicious. So yes, I'm still looking for a blow-off considering all the exogenous factors the market's facing. The 10-year note closed the week at 3.57%, up about 0.1% or 10 basis points on the week, down about 0.3% or 30 basis points year to date. And again, a reminder, the next FOMC meeting is on May 2nd and 3rd. Roughly 1 week out, please check Medium next week. I'll be looking at Fed funds futures and giving us an idea of what we can expect. Oil closed the week at 77.90, down about 5.6% on the week, and now down about 2.9% year to date. So now you know what I was up to last Friday. Yep, Friday being Friday, of course I bought Bitcoin. Of course I bought Ripple. It's my Friday morning routine. Just keep buying, guys. Buy Bitcoin, buy Ripple, buy stocks, buy property. If you want to build wealth, that's what you got to do. Invest any amount you can. Keep at it regularly over the long term, and you'll see good stuff will happen. So now let's dive in. Let's see what me and my buddies have been talking about all week. We talk about the markets. We talk about the products. We talk about the players. We are global Wall Street, and we are absolutely everywhere. We're on Wall Street. We're in the city of London. We're everywhere else that matters. And on global Wall Street, everybody either knows someone or knows someone who knows someone. We talk all week on a private Telegram channel about the markets, about the events, about the players, about the money. What else are we going to talk about? Sports? My God, don't make me laugh. I don't do sports at all. So this evening we got 7 slides for 7 days. Let's go. And our battle cry, people, is simple. This is finance. Do you want to make money? Well, the rules are pretty simple. The science is exact, but it's easy to explain. Take a look at earnings. If you look at earnings, if you get an idea about how earnings are performing, you know how the stock market is performing. It is that simple. Here we've got earnings estimates forecasts, I should say, for Q1 2023. And you can see no fewer than 6 sectors are expected to outperform the S&P 500. Consumer discretionary, we expect earnings to grow some 34%, industrials 12%, energy 9.2%, and then we go a little bit more boring. Financials 2.4%, real estate 0.7%. Consumer staples, we expect to see a 5.3% loss, but still, that's lower than the S&P 500's overall loss in earnings of some, or contraction in earnings of some 6.8%. At the other extreme, we see materials. We expect earnings to drop some 35%, healthcare 20%, information technology 15%, communication services 14.9%, and utilities 9%. It's just the math, guys. All you want to do if you want to pick stocks, you have to look for the sectors that are expected to outperform, and then you start to select companies within those sectors, and you'll do well, except if some government tries to rewrite the rules of finance. Now, this is something we teach at the undergraduate level, the relationship between risk and reward. There is a reason why when your credit score, your FICO, your Fair Isaac credit score is low, there's a reason why you have a higher rate of interest on your mortgage. There's a reason why if your credit score is high, you have a lower rate of interest on your mortgage. You're less likely to default if your credit score is high. You're more likely to default if your credit score is low. I don't know what bozo came up with this plan, but what they're proposing to do in the States, if your credit score is low, whatever the bank wants you to pay on a mortgage, the feds are going to knock it down by 1.75%, 1.75%. And if your credit score is good, the feds are going to increase your mortgage by 1%. My God, where did this stupid idea ever come from? It'll be interesting to see if it ever comes to fruition, if it becomes law. But my God, they're pathetically stupid there in the States. This is just nothing that you engage in. You don't start to try to rewrite the fundamental rules of finance, of risk and reward. And the golden rule, however, is really simple, and no government can rewrite this rule. Guys, we have adopted in America, for all intents and purposes, modern monetary theory, MMT, which means you can print as much money as you want. You can take on as much debt as you want, and it doesn't matter. Now, we're starting to see how idiotic MMT is. I'm not so sure the government's going to change their mind. They're going to continue to print money. They don't care about inflation. In fact, if you read books on MMT, I have, then MMT suggests the solution when the deficit gets too high, and the solution when inflation gets to be too high. MMT suggests the solution is to raise taxes. Do we really need tax hikes now to deal with government-driven inflation? I don't think so. Regardless, we all want to build wealth, and I think we all have that friend, that buddy, that acquaintance who wants to know. Once they learn you work in finance, once they want you to tell them what stocks to buy. I don't do that ever, not even with family members, guys. Remember the old expression, give a man a fish, you feed him for a day. Teach a man to fish, you feed him for a lifetime. Yeah, I don't give people stock tips. I give people the tools, the techniques, the knowledge they need to understand themselves, what stocks they should pick. That's what I do. I never give financial advice that way. Even when it comes to cryptocurrencies or Bitcoin. Although I will say, I'm not really a nasty person, but I've kept pitching Bitcoin for years. I've given away a lot of Bitcoin. At some point, we're going to see people that didn't listen. The shitcoiners, the pre-coiners, and the no-coiners. They're all going to be crying these salty tears. I feel sorry for them. They've always had the mechanism. Someone I know who's a subscriber to the channel, every time I mention Bitcoin, he says, oh no, he's going to wait for it to fall. It's too high now. Then he's going to buy some. Okay, it's fallen. I actually Skyped him. I said, you buying? And I didn't get an answer. He's not going to buy. What can we say? Wealth is not for everyone. That's the only thing I can say. But we do know this, guys. We know that a lot of people are starting to look at Bitcoin a little bit more carefully than they have before. They're starting to realize that the dollar, fiat currencies, are no place to be parking your wealth. You should have a percentage of your wealth in Bitcoin, just like you should have a percentage of your wealth in precious metals. Of course, traditional financial planners say between 5 to 10% of your wealth should be in precious metals. I sort of go overboard. I've got 71% of my retirement capital in precious metals. Bitcoin, not going to tell you how much of my wealth is in Bitcoin. However, I don't have much money in Bitcoin, but I have a lot of wealth. And if that doesn't make sense, you just go back and think that I've been buying Bitcoin every Friday for years. Not putting a lot of money in every week, but Bitcoin goes up over the long term. So yeah, do yourself a favor. Buy some Bitcoin, guys. All right, that's it for this week. I hope you enjoyed it. Once again, my name is Dave Coker. This is Talking About Finance. You are going to have the most awesome week. It's going to be wonderful. You just get in the markets. Doesn't matter what your market is. Stocks, bonds, cryptocurrencies. Well, there's only one cryptocurrency you should be paying attention to, Bitcoin. But get in the markets. It's a totally different frame of mind once you're in the markets. Take care, guys.